If you're out there typing a wire, yes, everything's coming through loud and clear. Let's start with the risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, forex, cryptos, you know the risks. All right, let's get into the charts. Well, let's get into my social media slide. Just kidding. All right, hey everybody, happy Monday. How we doing? Nice to see everybody. Tron in the house, Chris here, Sterling here, Andrew here, Wayne, what's up? Good morning, good morning, good morning. Gary, good morning. Okay, so I was just spending the last probably 30 to 45 minutes. I'm just getting some pending orders set up for this week. I took some assignments last week. Really busy management week. 21 expirations, only ended up getting assigned on 5 stocks, which is fine. And have price pretty close to current levels. So what I'm looking to do is see if I can get filled on some covered calls. Because Wall Street's closed today, I don't think I'm getting filled on anything until tomorrow. So I might have to adjust the prices, just depends. I might have to look at the time. I'm trying to get some covered calls out to 225 expiration, which is this Friday, to drill down some of the costs, but I'm certainly willing to go out another week if it pays a little bit more premium. So let's take a look at everything today. Again, Wall Street is closed. Forex market is open. We'll take a look at the currency strength chart here. Talk about some cryptos. I did buy a little bit more Bitcoin over the weekend. We had a pocket hit at 38,300, and I went ahead and threw a few more bucks at it. So volatility-wise in the Forex industry, we have 35 to the upside, 30-ish to the downside. Things pretty quiet. We've got New Zealand, Aussie, and Swiss, which is an interesting combination for the stronger currency pairs. And to the downside, we have the CAD coming off the lows. The dollar is one of the weakest currency pairs. The euro has been steadily declining all morning once we started that euro open around 3 a.m. Eastern time. So let's take a look at everything, yeah? All right. So for this week, I'm going to take a quick glance at my equities on demand trade tracker and look to see what we have for some 225 expirations. I know we had some staggered credit spreads going out to this week, and also there are a ton of earnings this week, so we will take a look. I don't think I'm going to place a lot of new trades. It's been a lot of management. I did take some assignments, like I said, the last couple of weeks, and I'm not necessarily looking to add a ton more if I don't have to. So what I do have for expirations this week, we have an expiration on Coinbase. That is a pretty straightforward credit spread. If it's above 230, we'll make money. If it's down below it, we won't. If you've got the capital to own Coinbase, which I'm looking to take some shares of it, ideally I'd like to cash in a long put really, really low. I mean, Coinbase is trading like 180-ish. Coinbase is trading at 189. So unless we have a big rally this week, this high is 213, 214 or so. If we have a flush down, I would like to cash in that long put as low as I can towards like 165. But again, price action will determine. There's no movement on it today. So I'll essentially have to manage this one Tuesday through Friday before the market closes. But I do want to own Coinbase. I certainly want to own it as low as possible. I think this is going to be a similar stock to play along with cryptos. If you're liking the bullish, outlook in the next 12 months, the next 3 years, 5 years, 10 years, hopefully Coinbase is going to be one of those stable exchanges where it's the largest, crypto broker in the world, and we'll see if it gets some legs from there. So I'm still trying to build a base position, a little bit of shares. I think I have 300 or 400 shares of Coinbase. But again, we had these post IPO levels around 200, 212 or so, and we just recently flushed down below that. So if we can build a base, I think this is a great spot to break the right-hand side of the trend line. Once we get back above 215, 220, I think there's a lot of recovery levels back up to 260 plus. If you give this stock enough time, I think this is trading at, $400 to $500, but it's going to take possibly years to do that. And on that note, a lot of these tech stocks that have been beat up by 70%, 75%, 80%. Those stocks are going to take potentially years to recover all the way back to the highs. Now, that doesn't mean we can't have some really good gains and some pumps in the near term. Case in point could be something like this. I talked about this in a live session not that long ago. This is ARK Investments, one of Kathy Wood's represented ETFs. Disruptive technology, should be great for the next 3 to 5 years. But from a technical side, if all I traded was I started to participate in ARKK, I initially bought some shares at 124, and then I did a credit spread, which was a 77 by 76, and I also cashed in on a long put. So right now my break even on ARKK, let me find out exactly what it is. ARKK break even is actually, that is crazy. Yep, okay, so my break even is $75.51. So even though I started buying this stock at 124.03 with this credit spread and cashing in on a long put, and I had a slightly bigger position, my overall break even is 75.51. Now, my point is this. If this stock rallies, corrective move is completed, okay, this could be a really nice harmonic pattern, and that tends to trade back to the merge or the base of this harmonic pattern. And that puts us right around $100 a share. So if I own ARK at 75.51 and this thing decides to form a base, I'm not saying it has to be this low, but if we form a low and we go up towards $100, I will be looking to cash in per share around $25. So I will be happy with that. Obviously, price needs to rally there, but I've got chart alarm set, and that means I don't have to wait for this to go all the way back up to the highs. So what would that look like from a return standpoint? If I'm in where current price is $64.80 and we go up to $100, that's a 54% rally. That's an amazing rally in the stock. But for me to make, $25 a share that I'd be happy with versus having to wait who knows how many years to get all the way back to the highs, which is 146% return. Again, I'm just trying to lower my cost basis, and I know that it's going to take potentially years to get back to a lot of these highs where tech stocks have been beat up by, like I said, that 70+% sell-off. Peloton's the same way. ARK, Twitter's been beat up. PayPal's been beat up. We've seen, Facebook's 25-30% off the highs, which again, for a massive company that, a lot of people are arguing now that it is undervalued. But Facebook has faced a lot of scrutiny. They're putting a lot of money in the metaverse, and it was a sell-off. So there's a 46+% sell-off in Facebook. You could argue that's a discount. I think realistically, from Facebook to return just back to this, this abusive earnings gap, that's a 40% run on Facebook. I think we can make that type of run. I think we can have a relief rally there. Okay, but do I think that Facebook is going to be, do I expect it to go 85% in the next 6 to 12 months? Probably not. But having some lows forming and recovering a little bit, it makes sense. And and let's talk about some real levels on Facebook. Is it out of the question for a stock like this to fall back down to the COVID lows? We are in absolute free fall mode. So unless this is, X, A, B, C, D, and this is another overstretched harmonic, if we stabilize, we expect this to pop back up here towards 280, 285. If it falls all the way back down here, that's just a huge reset. Would I still buy Facebook at 160 and 150? Yes. But would my immediate target be the highs at 380? No. If I bought it down here and we come even to sniff this post-earnings gap when the market just abused Facebook at 240, 250, anything I can get to lower my cost basis right there. Okay? So I'm not done with Facebook. I've got some shares in. My break-even overall is like 284. So it's up there. Like, certainly I'm not happy with my overall position on Facebook, but trade size wise, it's not too many shares, and I will continue to monitor and manage it, and I'll be patient on any additional add-ins. My next big level on Facebook is going to be down here. Like I said, those COVID crash lows, 150, 160. That's kind of my next spot to get interested. All right. Let's see here. Steve says, what do you think about the DXY this week? We'll take a look at it. Yep, we'll take a look at the DXY. Yeah, let's do a little dollar index, DXY, oil. So 12,168. We're still stuck very sideways on the dollar index. And we've been having this has been happening now for over 2 months now. Outside of a little fake out, we had a fake out to the downside first, a fake out to the upside. We're still stuck between these levels on the dollar index. Okay, now I am looking at the larger time frame. I'm looking at where we just came from on the dollar index. So what I think is setting up, what I think is pending, is we have to get through the March rate decision. I keep saying that. It's going to sink in one of these days if you're hearing me. But there is a free FedWatch tool. You can go to cmegroup.com and look at this FedWatcher tool. I'll post this in the chat if you're interested. So I'll post this in the chat. This is a FedWatch tool. There you go. Save that link. And what you're looking at right now is, and again, these levels, 82.8% at a 25 basis points hike, that has been as high as 90% and as low as 20% in the last 2 weeks. So, you know, with Russia, Ukraine, with inflation, with the Fed talk, I mean, we've had Bullard speak, we've had Powell speak, we had FOMC minutes. All these things have created a little bit more uncertainty on what exactly is the Fed going to do. And so when we look at this chart, where we came from were 4-year lows, right? We had this big breakout 2014-15 on the dollar. Now we're sitting at 4 or 5-year lows, and we have created a bullish pattern, and we are looking at that path of least resistance to continue to go to the upside. So this is why I think all that is happening right now on the dollar is this is a wave 4 correction. That is what I think. Okay, now a wave 4 correction pushing into a wave 5 trend means that this dollar index, I think, is going to break to the upside. Now, does that mean it can't go lower? Not at all. We could actually have a wave 4 correction where it comes all the way back to the lows again. So if this is high to low, we can come back to the same lows. We could even come down into this year and then see our pop to the upside. And maybe all of this is setting up for the timing in and around the FOMC rate decision. And I think what the market is wanting the Fed to do is give them some guidance on how aggressive they will be this year. So is the Fed going to raise rates 7 times, 4 times? Is it 25 basis points? Is it 50 basis points? You know, usually the Fed is pretty clear about this stuff, but we have seen this tool move a lot. So again, the probability right now is saying that over the next few weeks, we have a 25 basis points hike coming from the Fed. Now, what's going to be interesting is truthfully, that is like the Fed still being pretty dovish in the face of, you know, very high inflation for the U.S. and global inflation, supply chain issues, and everything that just made this just a cluster F. You know what I'm saying? It's just been difficult to manage, and the Fed has not been explicitly clear with what their plans are, other than they are tapering, they are tightening, they're going to start raising rates. But to what extent, how far, how fast, that's what we don't know. Right now, we talked about this last week in the Flex Room. I looked at the calendar here with this tool. 1, 2, 3, 4, 5, 6, 7. If the Fed raises rates 25 basis points every month that they have an FOMC rate decision for the next 7 meetings from now into December, okay? If we raise 7 times at 25 basis points, that will put the federal funds rate around 1.5%. Now, is that enough to tame inflation? I don't know. But it's in that wheelhouse where I think we can still operate. I think we don't necessarily have to crash the market. I think anything over 2.5% is going to send the market crumbling, because I just don't think debt can be serviced to that level with how much we've printed over the last 24 months. But again, we've kicked the can down the road for an entire decade, so who cares, right? Anyway, but that's the thing is, I don't know if they're going to do that. 7 rate hikes is kind of unprecedented. We usually have seen like quarterly rate hikes, and that's a pretty common standard. The last time we went on those rate cycles from 2018, we did 4 times in 1 year. So roughly quarterly, right? So this is why I think the market has created so much uncertainty. The stock market is showing uncertainty. The dollar index is showing sideways consolidation. I think the dollar index continues to push higher. It might take the Fed to kind of open the floodgates to volatility. So I plan for the dollar index to still get up to these multi-year highs. But how we get there is, it's difficult treading right now on the dollar crosses. I'm looking for equal lows to buy, which is 12.091, or possible channel support and this yearly pivot at 12.006. That's dollar index. But from there, I'm actually looking to buy the dollar. Okay? We'll go to the DXY. You're going to see a very similar thing. Look at all the indecision. Okay? Now the channel and the angle of this channel are very different. Okay? So does this change anything? Not really. We still have a yearly pivot right here at 94.95. I could see this indecision right here on the DXY. High to low, high to low. Maybe that's our fourth wave correction. Maybe it pushes back down into this pocket, into this pivot, but finds support, and then we're looking at a fifth wave move to the upside. I do see dollar index getting stronger. Okay, the only way that I see the dollar index getting weaker is if the Fed is going to balk or hesitate on raising rates, right? And if the Fed is going to make it a clear initiative that they want to keep asset prices up, if they want to keep the stock market strong, right? Then that would be what's sacrificed. If the stock market's going to stay resilient and strong, the dollar's probably going to get hit to the downside. But even if the dollar gets hit to the downside, look, we have this low, we have this low, we have multi-year ranges that we're trading. So how far does the dollar go down? Not very far. I mean, we can certainly come back down to revisit lows. Okay, fine. But I'm still going to buy that dollar from the lows and trade the range. So there's still a lot of support built into this. I don't think the dollar makes that big of a move to the downside. I think we have all this uncertainty for a reason. I think most big money is going to be playing by the dollar because this rally is probably going to continue. It makes sense with a central bank that is on a tightening cycle, right? And yet the market hasn't necessarily priced in all of the rate hikes or what the percentage will be by the end of the year. And so that's why I think we're hesitating now. We get through Q1, we get through March's rate decision, we see what the Fed has lined up for us for the next 6 to 7 months, and then the market starts pricing in those cycles once again. Make sense? All right, so again, kind of a long-winded answer on the dollar index and DXY, but this is also why we've seen a lot of sideways movement, a lack of volatility. We have very little follow-through in the Forex market right now, and that is what we're staring at every single day. So trying to make charts interesting, trying to make the analysis interesting, my direction hasn't really changed much at all. I have tons of chart alarms that still haven't even activated yet, and my P&L is barely fluctuating in Forex, and I have like 70 open positions. So that being said, I know there's a lot of tightness in the market, but that tightness is usually followed by explosive volatility and expansions, and I think that's what we're going to get post-Fed in March. So if you're willing to wait another 2 to 3 weeks, I think things open up. I think there's going to be plenty of opportunity for Forex traders, and don't get caught on the wrong side of it. You know, make sure you're paying attention, make sure you're trading objectively, because when these moves start to happen in March, in April, in May, you'll probably see some of the strongest moves that we've seen thus far in the Forex market, this year. Okay. All right, that's dollar index. Let's talk oil for a second. Oil took a little breather. We're trading at 91.66. Now I say a little breather because we're not really changing any structure. Okay, look at this. We have like a one-day sell-off, and then we force these long wicks to the south. I don't see oil prices changing too much. I really don't. Okay, I see there being a lot of jawboning. I see there being some like oral intervention where everyone's like, oh, it hits $100. It's so expensive. Well, if you look at this chart, there's definitely room. $100 is more of like a round psychological number. But if you look at this oil chart, you have resistance back here around 107 to the highs around 111. So there is still room, even from current prices, if we keep seeing wick low, wick low, wick low, and it's not really breaking aggressively back down to, let's say, 85 or lower, if we stay just kind of hugged to the $90 area and we keep showing wick lows off of this $90 support, I think we are just kind of destined to stay bullish on oil, to stay resilient on oil. I like energy stocks for this reason. I think that oil is going to probably hit 100, probably squeeze more, probably one of those trades where it feels like, why won't oil stop going up? But I'd rather follow that than fight it. So there's room, even if you look at this chart, there's room to 110. Okay? So 100 is a psychological number, but we can blow through that area right there. 110, we have some multi-year highs in resistance, and that's where I can see us hesitating. All right, because we're talking about potential like energy crisis mode if we get to 110 or higher. And, it's great for energy stocks. It's great for energy companies. I mean, you've got companies that for the last several years have operated at margins that were at $40, $50 a barrel. And here we are at 90 plus, and they're crushing it right now. All right. But that can obviously change with, supply and demand. So pretty crazy stuff. Bloomberg TV on the background here just flashed up oil demand expected strong in Q2. I mean, it makes sense. Typically when we come out of, when half the world thaws and goes to like, hey, it's, going into Q2, we're talking about summer vacations. We're talking about traveling. If not everybody has an electric vehicle, you're going to be buying gas, most likely, So there's more travel. I mean, most likely people will be getting out of their house and traveling on air by flights. And yeah, I mean, usually we see a pretty solid, like steady demand through summer months in oil. So this is what I'm saying. I just think that we're going to stay pretty bullish. It may not move super aggressively, but I wouldn't force sell trades on oil. I know that it's calling for corrections. I've got all the indicators here for overbought conditions. I know that it's overstretched. I know it's divergent, but I'm not fighting this. I think oil stays resilient. I think we poke that $100 level, and if we break through it, there's room to 110. Before I would even really consider shorting it, it's going to be at 110. Okay? Now, I could be wrong. I mean, this could be hitting. We've already talked about this in previous sessions in the flex room as well. You know, if this is a bit of a pattern here where we have resistance back down, resistance back down, resistance back down, sure. I mean, technically that could be very simple. But I see a lot of long wicks to the south, and I haven't really seen a convincing break to the downside. So I think we're heading higher. I think we're going to head to 100. We hit that level. Maybe we pause. Maybe we breathe there. But I don't see it really doing too much. Okay. 202.20 on pound New Zealand. That's a good alert. That means that we should be up like 130, 140 pips on a few positions. Anyway, any questions on oil? So, in my opinion, I'm saying bullish. Okay, gold and silver. Gold's had a pretty good run. 1894. Look left in the chart. We have highs back up here at 1917. So a couple things we have hit on gold. We did hit symmetry recently. We have this low to high, matched by a low to high, matched by a low to high. So we did hit recent symmetry. If this is a head and shoulders pattern that's still in the works, I'm still bullish on gold with resistance now back at 1833. If we had that dramatic of a pullback, I'm still looking for this to offer a continuation up, take out the high, take out the high, take out the high. Let's see if we can get back to 2,000 plus on gold. I think gold and silver look pretty good to the upside. Okay, one thing that will factor into how gold moves is, will the dollar actually create a breakout? If the dollar starts to break lower, gold will likely continue its ascent to the upside. If the dollar starts to move favoring dollar strength, gold will retrace pretty dramatically. All right, it is gold and silver versus the dollar. So there will be some influence on what the dollar index does. All right, but overall, I still think both gold and silver postured pretty well for some bullishness. Okay, all right, silver. XAG 23.83, looking pretty solid. This one might take longer. There could be this slow build, high to low, consolidation, consolidation, consolidation. There could be a slow build on silver. We might even come back down to find this pocket around $19.50, but I'm still buying silver. I think we get back to $29 to $30 later this year. So that is a trade that I'm very interested in holding. I'm trading SLV as a stock to play this and play these technicals. And I'm going to continue to accumulate some additional positions on SLV. Okay. All right. Some cryptos really quickly. Bitcoin trading at 38,621. I'm not really going to add more to Bitcoin in this area. I've added a few. 45, 40, 35. I added this weekend at 38.3. My next level, if we come back to the lows, either 35 or down to the lows at 30,000. That's really my next spot. If it runs up, great. Everyone can be happy that we're getting a nice little rally on crypto, and maybe your whole portfolio will do well. But I'm just curious to see, like, if we're not done yet and this wants to come back down, this low to this low could be divergent, meaning that price makes a new low, but momentum does not. And if we start to form a pattern from there, perhaps there where the actual, that's more likely where the bottom might come in. So I will be watching price action very closely on Bitcoin. Of course, chart alarms are set. Chart alarms are set. I'm going to keep my eye on things. If I add more to it, it's going to be at 30K or lower. But I've added a few. I've nibbled in this area with all this support. Previous lows in 2021. I got some of that scooped up. 35,000 level. The lows like 33. But we're not having convincing bullishness yet, and everything is kind of slow for right now in cryptos. Okay, other than the recent sell-off, which is understandable because it's been a bit of a risk-off tone. All right. Speaking of cryptos, on a side note, if anyone's interested this week, it's going to be tomorrow at 12 noon Eastern time. I will be hosting for 8cap, thetradingbattle.com. You can come to the website, thetradingbattle.com, and you are all welcome to join. So this is going to be Tuesday, 12 p.m. Eastern Time. There's the link. You can register for the event. I know both these gentlemen very well. Rob Booker, Scott Welsh, good friends of mine. And we're going to have some fun with a little crypto battle. So sign up. It's fun. It's totally free. It's ACAP's an awesome broker. It's a non-US focused broker right now, but they trade. You trade Forex. You can trade CFDs. You can trade cryptos. It's great. And we're going to have a lot of fun with it. So I'm looking forward to hosting this one. I've hosted a few in the past. I've been a panelist and a participant in the past. And they're always a lot of fun. And the fact that, Rob is a long time, stock trader, long time Forex trader. Scott was a runner-up in the FX World Cup in 2020. Auto trader that I've known for the last 10 years, full auto trader, always impresses me with how much he studies and tests and changes and modifies. And so in their own rights, obviously great traders. But we're going to have a lot of fun on that session. So again, just go to the link, thetradingbattle.com, and you can click on this watch button, sign up. And that's tomorrow. That's Tuesday at 12 p.m. Eastern Time. Okay. All right, cool. So that's Bitcoin. Let's go back to Ethereum. Let's see here. Ethereum, still sliding. I've got a little bit that I added around 25. My next level is going to be down here. Let's see if we can revisit this 2,000 to 1,800 level from 2021. Okay, so I will be watching. I'm not jumping the gun here. I'm not thinking I've got to get all in. It's like, look, we might actually come back and crack the lows, right? Ethereum can come down here, crack some lows for the year, and then build a bullish position and then make its way up to highs later on. So we could have this structure playing out on Ethereum. We could have similar structure on Bitcoin. Becomes just a really good trader's trade. So that's what we're going to watch for. All right. Pound New Zealand dollar. I saw that chart alarm go off. That's a good sign. 202.25. We just found this monthly pivot. We are looking like we're going to slide a little bit lower. I do have some trades in on the pound New Zealand dollar. And it is pretty simple. I'm looking for at least this level right here to be hit. That past resistance becoming support is right around 2.0070. And if this is high to low, lower high to lower low, we're coming into that level. I talked about this last week in the flex room. If it's good enough, because we have had a couple of positions. I know that I took my first trade around 203.68 and my other trade up here around 204.50. So both of those right now are in some decent profit that I can protect. So if I want to just protect the profit, say it's good enough, you can close that thing down. And if it runs a little bit lower, you're sacrificing an extra gain. If you want to wait and see if this will flush down a little bit more, maybe you can grab another 100 pips, 130 pips out of this move and then protect it. All right. But between 2.0070 and 1.9800, this past resistance, this breakout and pocket area, this is my profit window for those that have been short on the pound New Zealand dollar. Okay. All right. Good stuff on that. Happy to see that chart alarm activating. And then pound US, or pound Aussie rather. Pound Aussie, similar. Looking to see if we can confirm a head and shoulders pattern right here with another potential sell-off. So left shoulder, head to neckline, right shoulder. Can we break down here, get on the right-hand side of the trend line, make our way back down to lows, make our way down to this yearly pivot around 1.84. That would be a nice looking trade considering trading at 188 and change. So 400 to 500 pips to the downside with some confirmation. Or what I'm trying to do on the pound Aussie is also, if we come back and retest the high, I'm looking to sell it high. Equal high, see if we can come back down to the lows, break the lows, and then double that move. That's what lines up pretty nicely for that pivot to get hit. So we could have a double top forming here as well on the pound Aussie. So I'll be watching for plays like that. Okay. Daniel, DWAC, are you asking me about that SPAC play? What about it? I'm not interested in this, man. I mean, honestly, like, SPACs are freaking garbage right now. And I know that this one is holding its own, but I just don't see a lot of love in the SPAC world right now. There's probably, well, again, I mean, if I want to buy this, it would have been the retest. I was actually interested. I didn't jump in here. I had a couple of friends that jumped in here and made, some pretty ridiculous money when that thing went public. But I thought we would come back down and revisit some of this area around like, $20 to $30. That would have been a great spot to be looking long. But I'm not really that interested in buying it now at $80. My wheelhouse, if I'm looking to own stocks, whether I'm dollar cost averaging in or buying fractional shares, if I'm going to, own stocks, I like to own most of my stocks, under $60. So there's a lot more maneuverability on that with, credit spreads and assignments and stuff like that. Way more affordable than obviously jumping in heavy 100 shares at a time, trading options at, 80 to $100+ stocks. Okay. All right. Any other currency pairs? Any other stocks? Like I said, I want to review what we have this week. We'll talk about this in class at the top of the hour for Equities on Demand when the trading room starts. We have a Coinbase expiration this Friday. We have a ConAgra expiration. We have Campbell's Soup. We have Facebook. We have CTRA, which is an energy play. We have CLF, which is steel. And that's it. So not tons of expirations. And I probably won't do a ton of new trades this week. Last week was a super active management week. This week is a little bit more low. It's a little bit, I'm just going to say a low-key week. But we do have some covered calls to cover in class. A lot of them, actually, because some have expired from last week. Got some extra margin back. I want to make sure I keep drilling down my cost and making sure that I stay above my break even. If I lose some of these stocks, try to flip them for $2, $3 a share. So that list includes Deutsche Bank, DigitalOcean, Kraft Heinz, OKTA, Palantir, PayPal, Uber, Twitter, Under Armour, and Viacom, which if you follow me on my Pulver Report newsletter, I issued a credit spread on Viacom, which now the ticker is PARA, which is just for Paramount. So they went ahead and, they're getting branded after their powerful streaming side, which is Paramount. Everyone knows Yellowstone. You probably watch Yellowstone. And so Paramount is now the official name instead of Viacom CBS. But I own Viacom now. I collected a nice little profit on the long put. And let's see, my long put I cashed in. I've got it right here. Viacom Para. I cashed in for $6 on the long put. So my break even is $28.85. And right now it's trading at $28.38. So I have a $30 covered call to repair this for a few bucks. And let me make sure that was it. I think I put in a covered call here. $30 covered call. So that would give me $1.15 if I can repair it, if I lose the stock, rather than, taking a 27-cent loss in the trade. I would turn this into $1.15 credit per contract. So I make $115 instead of losing 27, which is fine. Okay. Let's see here. Daniel, euro dollar seems to be bullish off this week's pivot. Let's find out. Bullish or bearish? We're kind of stuck between a lot of pivots here, Daniel. That's what I see. Now, again, we can stare at the euro dollar all day. We can also stare at the dollar index. Unless we see the dollar index breaking higher or lower, unless we see, that major representation of the dollar go somewhere, you're going to stare at the euro dollar and wonder, why isn't it going up or down? Because it's still tied to the dollar index and the most heavily weighted currency that's in it. So all I'm going to do on the euro dollar is set a chart alarm at the highs at 14.95 and at the lows at 11.25. So let me make a note here that is 14.95. So 1.1495. And then my lows 1.1125. Okay. So to convince me this thing's bullish, we got to break the chart alarm at 14.95 and then head up to our yearly pivot. Head up to our harmonic merge, 1640 to 1700. Great spot to be bullish. Great spot to be protecting profit. Okay, if it heads back down to the lows, this one has room to not just get to 11.25, but find this 110 breakout point. And I'll zoom out and show you what I mean. You look left on this chart, this is a pretty obvious inefficiency right here. Right in there. So if we find this area to the pip, that's around 110. We find these lows around 108. This is where I see where we can put in some decent lows on the euro dollar. Okay? So if that is the case, I'm pretty bullish on euro dollar at this 110, 108 window. But we have so much indecision on that dollar index, I can't make a statement saying the euro dollar is bullish right now. It's not. It's just in between. To finish it, you might as well get down to 108 and then buy it lower. Or if we have that corrective move against the dollar, let's get to 116.50 or 117. And if you are long, I'm personally long on euro dollar. I've been long here since like the 1300s. So I'm hoping that we can get up to 1650 to 1700, find that harmonic pattern, find that yearly pivot, and take some profit. But I am prepared for this thing to go lower as I have pending orders at 110 and 108, just in case. Okay. Yep. So we'll see what happens. I mean, like I said, you're watching the dollar index. It's just the inverse of the euro dollar. I mean, they're going to be related. So the dollar index breaks a higher low, then expect your euro dollar to break a higher low. Dollar index breaks a higher low. Hopefully that'll translate into a pair on like the dollar Swiss, right? One thing that's interesting is how is the euro dollar sideways? And I mean, granted, this dollar Swiss is also sideways, but I've got this one surrounded. You know, I've got pending orders that are buys, pending orders that are buys on pullbacks, buys in continuation. I'm actually kind of happy to see this. If we get more chances to enter on the dollar Swiss, I'm going to enter long on all these levels. So trade the range, trade the range, trade the range, hold this thing previous highs, and my projected profit target around 96 plus. Okay, so we'll wait and see. I'm watching dollar Swiss. I'm watching euro dollar. Euro Swiss is probably heading back down to the low 104s. Yep, we're there again. This stupid euro Swiss, man. So I remain patient. I know that this, so we did not hit the early pivot. We did not find the 106.50 pocket. We have pivots like crazy. Crazy oversold conditions with divergence, but I also think that the market reacted to that with that ECB squeeze. So, I don't know. I mean, it's coming back into possibly a deep crown pattern. And if that fails, then I am, you know, kind of plugging my nose and hoping that, well, I'm expecting if we break the lows, we might come all the way back down to parity, 1.00. I'm not going to say I'm going to be thrilled to see that happen, but it could certainly be the play. Now, having said that, we are on the right-hand side of the trend line. I'm not drawing that very well, but here. If we're on the right-hand side of the trend line, okay, even if we come back down to lows and we use the backhand side of that trend line, I'm looking for a low to form. All I've been telling traders for this year is I'm looking for bullish confirmation. I'm looking for bullish patterns to emerge on the Euro Swiss. If we get it, I'm going to trade it. All right? So again, another trade that we have to sit and wait and watch. Chart alarm set, and we see how it plays out. Okay, Aussie, New Zealand starting to roll over to the right-hand side. A lot of the other currencies we've been in. I've been long on Aussie CAD. I did take a couple of trades off. I protected 2 trades for profit on the Aussie CAD this morning on my phone, and I'm looking to get back in. If we come back into these lows again, I'm buying more Aussie CAD. Okay, if we have a push into this area, we might have a chance to sell this Aussie CAD. If you're objective, you don't have a bias right now, we could sell high and take it right back down into channel lows. I have a directional bias. I am still targeting this yearly pivot. So what I'm trying to do is look to buy some dips and level myself back into some dips off this channel, and then eventually we make a run into that yearly pivot. A lot of consolidation on this one. You know, it's 2 commodities. I think we have great technicals. Oil is certainly a factor that's provided some additional resiliency in the Canadian dollar, but I'm still going after that yearly pivot on Aussie CAD and on New Zealand CAD. CAD Swiss is another one that I'm in, trying to buy some dips on. 71.20 is another entry I have pending, and I'm going to look to take this one back up to range highs around 75. So, you know, I still like the basket, the Swiss basket. Right now, the Swiss yen kind of driving me crazy, but I'm going to sell it up here at 127 or get some additional confirmation on the right-hand side of the trend line, which hasn't broken yet. And we've got a yearly pivot at 123, just under that. We've got pockets down here at 120. We've got this awesome low at 118. But we need to see some pretty obvious confirmation on the right-hand side of the trend line, and there's plenty of room for the Swiss yen to drop. Right? Some confirmation will go a long way on anything that's Swiss related. Pound Swiss is another one. I've got some small trades in the pound Swiss. I'm holding long. Right now we're at 24.81. I'm looking to see if we can break this outer trend line, and there's freedom on the pound Swiss to run up to 1.30. So we could have a pretty spectacular basket trade in the Swiss when it's ready. Pound US dollar 36.09. A lot of indecision on this one as well. The last couple of days, indecision. I set this up last week with my Elite Flex Trading Room, little automation class. Set this up with a Price Action Pro. If we break higher or lower, I'm going to go with this trade. So if it breaks higher, I'm following it. If it breaks lower, I'm following it. If it gets stopped out, I'm going to reverse it and go the other way. I do think there's going to be some volatility that does break out and go probably 400 pips either direction. If we break to the upside, I'm going to target 1.40. We go to the downside, I'm targeting these lows at 1.32. Pound US dollar should be able to go somewhere else. Okay? All right. Swiss yen, you good on that one, Tron? Yep. So I'm still in the same position, still holding, still waiting, still patient, looking for some trend line confirmation will be good. Okay, dollar CAD, still long on dollar CAD. Looking better. Want to see if we can get back to these highs around 29.50, 1.30 is a round number. If we run up and surprise ourselves to the upside, there's room to like 3,300. Trend line, connect the highs to form a channel like that. And if we go low to high, little consolidation, and we push up again, you know, watch this level, respect these previous highs right here at 29.50. If we can get through them, then we're through the 3,000 handle. We hit 3,000 plus, there's room to run up towards 32, like I said. That would complete this channel move. We also have a missed yearly pivot from 2021. All right, so I do like long on dollar CAD as long as we are not breaking below 24.50. Okay, Euro New Zealand. Euro New Zealand, I don't have a trade on that one. This one has, so I was looking to sell the Euro New Zealand if we came back up to this 78 to 8,000 zone. This one just turned very aggressively and kind of in the middle of nowhere. So what we might have forming here off of this pretty strong support, we could have a potential crown pattern setting up on the Euro New Zealand where it builds a right tip, and then we look for that trade coming later back up to that pivot. So there might be a bullish play coming soon where we can build a position. We can kind of level ourselves in off a major swing trade on the Euro New Zealand. But we were long. We were long in here. Okay, we got long in this inefficiency right there. We broke out at 6,800. We took a long trade there. So we've been in and out of the Euro New Zealand quite a bit. I just didn't expect this to be the turning point right here at some random number. I mean, there's a little bit of structure there, but there's nothing substantial. So anyway, I thought we would, if it was going to make this run, I was suspecting we'd come up to this yearly pivot here, and then we start looking for sell opportunities, and then this recent sell-off would have been much higher for us. Wasn't the case. So now that we have hit this high, I'm wondering if this is a structure play that we get back to this yearly pivot from 2021. I'm not sure yet. And I'm not going to force that trade. I'm not putting in swing trades yet. I want to see if this will actually build off this support and the yearly pivot and see if we can get a swing from there. But there would be a stop loss involved in that trade. Okay, but otherwise we did take some good profits on the Euro New Zealand, and we will just pick our battles and reload when we see a good trade. Okay, good stuff on that one. Anything else? Let me take a look. I'm gonna get some. Let me get some earnings this week. So I have. Where is my? See if I have a little. That's not it. Huh. All right. I know there's a lot of earnings this week. I'm just trying to find a little summary. Why is Carl Icahn at McDonald's a thing? I got to read up on that. Norway Winter Olympics. The week ahead. Oh yeah, we have like crazy cold weather coming around the world right now, which will be awesome. Trump's gonna have a app coming out. Fantastic. The other day, trades the peso at the end of the month in the account. People send money home to Mexico for their families. Any truth to that? I don't know. I mean, possibly. I mean, at the end of the day, it's still a transaction, right? Dollar peso. It's very possible. Now look at this. Look at the end of every month and see, does that have any substantial movement? I mean, the peso to me is like not even in a tradable zone. I'm looking at the daily chart. I'd be interested in buying down here at 19.68. I'd be interested in selling up here at 20.67. Anything in between, maybe you get a day's transaction, but I don't know. I'm sure there's truth to it, but unless the pair itself to trade it at a good level, I'm not going to do anything with that. Oh, I see what it is. All right. Okay. Any other earnings stuff? I'm just looking for a little earnings recap. It's hard to kind of. I'm not seeing it. Usually, my Robinhood Snacks gives me a good summary, and they didn't send me a newsletter this morning. They're late to the party. All right, we'll go to Earnings Whisper. If anybody has another So some notables here. So we have Alibaba on the 24th. We have Block on the 24th, Home Depot. We have Macy's, Moderna, Teladoc. I do own some Teladoc. On the 22nd, that's going to be tomorrow. Fubo, is that a TV thing? Yep, Fubo TV. Lowe's. So there's like tons. There's like, I read something like 700 companies with earnings this week, but I was just trying to find some notables. Anyway. So I know we're going to have a pretty busy week. I know it's a short week because of President's Day, so no Wall Street today, but Tuesday through Friday, plenty of earnings to roll in. And look, it's been a wild earnings season so far. I mean, we've had companies that have beat expectations and got smashed after the fact. We've had companies that have missed and done fine. We've had companies that have missed and just been punished and abused. So for the most part, there just continues to be an unwinding, a deleveraging. If, let's say if the street's not feeling it and they think it's overpriced, overvalued, whatever reason, they want to buy it lower, there's probably a lot of unraveling from decade-long positions that have been, straight bullish. So makes sense. Look, book some profits. It's probably happening a lot. There's probably a combination of profit taking, deleveraging, de-risk, maybe rolling into different sectors. Like I've talked this whole year about rolling from growth into value. We're looking at different energy sectors, financials, staples, basic materials. Those are all doing really well this year. So tech is still very difficult to assume that it's going to be like super bullish. I mean, we're looking at the type of valuations in tech like you had back in 1999 and 2000. You know what happened there, right? .com bubble. All right. Anyway, anything else? I'm going to take a little breather here before we have class at 10 o'clock for Equities on Demand. Thanks for being with me today. I know it's President's Day. There's not a ton of action. But look, everything you're looking at in your charts for Forex, everything you're looking at in your charts. Look, Apple looks just like the SPY. All these indices are looking the exact same. They have highs, lows, we're stuck in the middle. I'm telling you, it's so dumb that it might have to come to this, but the entire market, stock market, Forex market, even cryptos, everything might be sitting on the volatility floodgates to open after the Fed meeting in March. I know that's dumb. It's like the market already knows probably what it's going to do, right? All these moves are probably premeditated. If you do this chart, if you do some analysis on the charts, you probably won't be surprised where price actually goes. But to open up those floodgates and actually start to see price move, it might be after that rate decision. And that's going to be 3 weeks away. So that's what's frustrating is there's nothing we can do to control the movement of the market. And so timing, we just have to be ready. If something comes out ahead of that and surprises us, great, set chart alarms. But I have a feeling we've been staring at this thing going back and forth, good days, bad days, bullish days, bearish days, lack of volatility, lack of movement, and a lot of uncertainty. So the market is clearly, pricing things in like no risk, less risk, pricing in profit taking, pricing in, rate hikes, pricing in the 10-year note. That's been on a steady rally. We keep hitting this 2% level, we get rejected. But if the Fed doesn't really take a dovish stance, this 10-year note continues to rally, and it's going to continue to put a lot of pressure on the stock market. Okay, so all right, look forward to seeing everybody this week. Equities on Demand. We'll start in the next 10 minutes. See you all week, Monday through Friday. It's going to be, covered calls this week mostly. Probably not a ton of new trades. We've got some expirations for Friday already. But I'm looking at some covered calls mainly with some of the stocks I've taken assignment on the last couple of weeks. Flex Room, we will do our best. I think I'm better off. I'm probably going to take some profit on New Zealand CAD, Aussie CAD, collect some more profit on the pound New Zealand, and maybe just pad the wins this week and just have some positions at the ready, have some dry powder, and just get ready for some of those chart alarms to go off. So we'll talk about that Tuesday, Wednesday, Thursday. Okay. Nuno pound Aussie we did. Euro Aussie is best for range trading because it's back and forth. Pound Aussie is just a massive range trade, and pound Aussie I'm looking for head and shoulders to the downside. So we talked about pound Aussie earlier. Okay. So all right, everybody. I'll be back on Friday. Same time, same place, 9 o'clock Eastern time. Again, one more reminder, if you want to join me for a trading battle tomorrow, I'm hosting Rob Booker, Scott Welch. It's going to be a lot of fun. That's at 12 noon Eastern time. You can go to the link, thetradingbattle.com, click on watch, get signed up, and we'll be live tomorrow at noon. Okay. All right, everybody. See you soon. Have a great week. Bye.